Okay, Tyler. So we've got Nvidia's earnings here, but the short version is the market seems like it's reacting to Nvidia's a pretty good earnings report with concerns that the growth rate is really slowing. I know a lot of investors have looked at Nvidia as the place to invest for the best returns in artificial intelligence, but that may not be the case going forward. We have a couple of stocks we want to talk about.
Yeah, we're not exactly the most NVIDIA topic heavy kind of group, you and me, but it doesn't mean there aren't good stocks to go around in the AI world that have nothing to do with technology at all most of the time. And I think this is a good time to talk about some of them.
Yeah, and you're gonna bring one to the table that is very, very key in like the picks and shovels of making it all work. And I've got one that talks about powering it, also making it all work. So we'll get to that. Welcome to Investing Unscripted. I'm Jason Hall. This is Tyler Crow. This video is sponsored by the Motley Fool. We've got a couple of great stock ideas we're going to talk about for you here. But if you're looking for even more great stock ideas, check out our special link. It's fool.com/unscripted. Go to that special link. You can get access to the Motley Fool's 10 best stocks to buy right now. That's a whole dozen of great stock ideas. Again, go check it out, fool.com/unscripted. All right, Tyler, I'm going to start off. I'm going to pull up on the screen. I want to share NVIDIA's results and just briefly go over it, kind of talk a little bit about how the results were really good. But some investors out there might be curious, why is the market concerned? Maybe, again, we're recording this the morning after the after hours press release and earnings call. So don't know what the market's going to do in the next few days before we publish this video, but there's a good chance it's not going to be up a ton based on the way the market is acting right now. But here you go. So let's just kind of hit the high notes here. Revenue, it's fiscal 2025. I always get questions about that. Yes, their fiscal year 2025, because it starts in like the end of January, not the beginning of January. $30 billion in revenue. That was a 15% increase just from the first quarter. We continue to see sequential growth. 122% revenue growth year over year continues to double. Margins actually came down from the first quarter, but they've been telling us, look, our margins are probably going to be in the mid 70s range. It's up from last year, but not as up as much as it was over the past prior quarters. Operating expenses have continued to increase as well, but expense spend growth is a lot smaller than revenue. Earnings growing a tremendous amount. Free cash flow, operating cash flow, all growing a lot as well. Outlook, I think this is maybe the thing that's driving some of the stock's reaction. Revenue, $32.5 billion, plus or minus a couple percent. That's a couple $billion on top of the quarter we just saw. But we saw revenue grow $4 billion from the first quarter to the second quarter. So now you're saying $2.5 billion revenue growth. So we're seeing signs that revenue growth is starting to slow. And it's looking like 2020, calendar 2025, which would be their fiscal 2026, growth rates of more in the 20% range. So I think that's a big part of the reason you're seeing that the growth rates are really slowing. They've still got great things happening. Blackwell, which is their next series. They've got customers testing those. They're going to start shipping in the fourth quarter, but that's the big product for next year. They're saying there's a tremendous amount of demand for it. So in NVIDIA world, things are really, really good and growth is still strong. Demand is still exceedingly strong. The stock has run so much and there's still a lot of growth priced into it, trading for in the 60 to 70 price to earnings ratio. When the growth rate drops into the 20% range, 20, 30% range, it gets harder to justify paying that much when it's already a $3 trillion company, Tyler. So we have some ideas for where investors might want to look to potentially get still really, really good returns based on how well these companies have performed in the past, but also maybe a little more margin of safety.
Yeah, look, coming from normally when it comes to growth, we don't think about valuation too much because it's like what's going to grow so fast that valuation doesn't matter as much. But
Right. You have a lot more slack in the line when the growth rates are extremely high and the market is really, really large.
but when those growth rates start to slow, you can see pretty precipitous changes in the way a company is valued. And nothing to say of NVIDIA's business, but on a valuation basis, it gets much harder to justify 60, 70 times earnings at 25% growth rates than it does 100% growth rates. That's my one little thing on valuation for growth companies. But okay, so let's shift gears and interesting companies that have some connection to AI a little bit. I know this is really going off the reservation here, but I want to talk about MCore Group because it's one of the companies I really enjoy. It's one I own and one that I think is going to benefit a lot from not just AI, but this trend towards the electrification and increasing power use that we have in the United States. If you want to talk about growing our manufacturing output from nearshoring, you want to talk about 5G transmission, data centers for AI, this is a company that's going to benefit in some way from it because it's the nation's second largest electrical contractor. So basically any business that is looking to do a large scale installation of that involves electrical or mechanical contracting, it's going to probably involve MCOR or its largest competitor, Quanta Services. One of those two is basically going to do the work for that. And just to give an idea of like why this makes sense for AI, let's think data centers, right? If you look at the actual construction of a data center, more than 55% of the cost of a data center comes from the electrical and mechanical work associated with the construction of the building. So there is a huge opportunity with the build out of data centers for electrical contractors to make a lot of money on the construction itself, but also on the maintenance sort of aspect of it. Because not only typically what happens is when you do an installed base of a large electrical system, you're also tend to get some sort of service contract to maintain it over the long term, say if something breaks or something like that. And that's what we're seeing with MCOR Group. For the past couple of quarters now, they've been growing earnings at about a 60% rate, I want to make sure that I'm directionally correct on that.
Yeah,
I'm looking at it
over
right.
the past 3 years, earnings per share is up about 164%. So directionally, you're pretty spot on here.
I think that there's a lot of attention paid to these speculative ideas in AI, and I kind of go back to the other times that we have seen in large infrastructure buildouts in the United States, railroads, the internet, things like that. That those sort of things have involved a lot of construction, and typically it ends up being the people that construct the projects that end up being some of the biggest winners because when demand wanes, they're not left with a whole bunch of factories that all of a sudden go idle. It's construction. Once the contract is done, there's not a lot on the balance sheet you do need to maintain afterwards.
Yeah, I think it's really good too because MCOR is much, and it's EMCOR, ticker is EME for anybody looking to figure it out. We have it in the show description too. It's as much as it's under the radar for most people, the stock's actually done really well. Plenty of investors are aware of how important the business is and how profitable it is. I think it's a brilliant idea because again, it's a great way to ride the tail of this because we're going to continue to see spending, even if AI is important, doesn't turn out in the near term, the next 3 to 5 years, to be this big panacea that we're expecting. Over the next 10 years, I think it's certainly going to, right? We're going to go through cycles, and companies like MCOR, like Tyler said, they're built to do well across that cycle without big liabilities when the cycle turns. So I think that's a really good take. I'm going to take us in a very different direction from MCOR, but it's a direction that I have taken investors in on many, many occasions, Tyler, and it's a direction you've gone as well, and that's Brookfield Renewable.
For Jason, all roads lead to Brookfield.
It feels that way sometimes. And in this case, with infrastructure and with energy, I think that's clearly the case. We've heard a lot from a lot of utilities, and we're seeing a lot of the like big energy trade groups, the International Energy Agency, the EIA in the US, they've started revising projections based on AI and based on accelerated computing and the massive amount of power demand that is being created on top of the already relatively high expectations for demand growth around the world as the global middle class gets a little wealthier, more people join it, more people expect power. Electrification of everything. Tyler, you and I've talked about that a lot with EVs, energy storage, moving to renewables, moving away from fossil fuels in some cases that are all tailwinds. So we can pull artificial intelligence and accelerated computing into that for Brookfield Renewable. Now, this press release happened quite a while ago, but I want to pull it back up because I think it really just puts emphasis on the scale of how big this opportunity is. This was back in early May. Brookfield and Microsoft agreed on a deal for over 10.5 gigawatts of global power capacity, renewable power capacity. It's a 5-year deal to deploy and develop that 10.5 gigawatts. I think this is really important, Tyler, because of one word here, new. So we've seen Brookfield be really good at going out and acquiring things. When the market gives it an opportunity to acquire things at a discount, they're very disciplined. They're also really good at developing. And now they have, on top of the entire Brookfield family of businesses, you have Brookfield Corporation with its corporate capital, and then you have Brookfield Asset Management, it's alternative assets with lots of external investor capital. Now you have a lot of money from Microsoft coming in as capital to help fund development of these deals. It speaks to the tailwinds. I want to put that 10.5 gigawatts in context too. That's roughly 30% of Brookfield's current capacity, maybe 25. They're between 30 and 40 gigawatts of total capacity right now. So that single deal is a massive deal on top of their other existing pipeline. And the reason I think that one deal to me is that's not the reason that Brookfield Renewable is attractive, but it's a symptom of what makes it such an appealing business. And if you think about it as a long-term investment, it's been a massive winner. Like MCOR too is kind of a lesser known business that's been very profitable and done really well for its shareholders. Brookfield Renewable has done the same thing. I think it's also really attractive if you're looking for income today, or if you're looking for dividends and dividend growth to be a part of your investment strategy. The dividend yield right now is around 5%, which is pretty attractive. Their corporate goal, their target is to grow the payout between 5 and 9% a year. They've been very consistently good at doing better than that. So they're really good at like setting reasonable expectations and generally over delivering, but with a lot of margin of safety. And if they don't have the ability to grow it over it in 1 year, they're not going to. They're really disciplined and smart about how they allocate capital. So my pick, if you're looking to leverage and benefit from AI, accelerated computing, plus all of the other kickers about the electrification of everything and the push towards more low carbon energy, I think Brookfield Renewable is an excellent stock.